What is going on, investors? Hopefully you guys are doing well out there. That is right. It is finally Friday, and it definitely feels like one of those finally Friday type days. And it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. Next week, we will have Netflix earnings. We'll talk about what to expect on this week's show. Meta Platforms going on a hiring spree. What do they have going on there? Nvidia hitting a $4 trillion valuation. We had Amazon Prime Day. We've got a lot to talk about. Better kick things off like we always do in Meta Platform. Start of the week at 716. This one bouncing around, but roughly ending flat at about 718. They are going on a hiring spree. Mark Zuckerberg sees an advantage that they could potentially take in AI probably over the next 12 months. He sees that you have an open AI. They have some issues. You have XAI. You have other companies, including Anthropic and others out there. It's a fragmented market, and Mark Zuckerberg is making a play to make Meta the leader here. This week, he hired a key executive from Apple with a pay package exceeding $200 million, which is a pay package that basically exceeds most CEOs. So Mark Zuckerberg is pushing his chips into the table. I read a long piece about all the stuff that they have going on with their data centers, and Meta is going to play it big time. Now, so far, shareholders have rewarded the company with a higher stock price. We'll see how they react when the company reports their earnings in about 2 or 3 weeks. But right now, shareholders like the investment. And if Meta can make it pay off, well, you've got a company with about a $1.8 trillion valuation with probably upside into the fours if they can figure this all out. They are not slowing down as it relates to wearables, as well as they locked up a key investment in a supplier of eyewear glasses, which most of you are likely familiar with. In fact, if you buy glasses, which I was actually at the optometrist earlier this week, it doesn't matter if you're buying Ralph Lauren or Versace frames or whoever, the chances are it's distributed or actually manufactured by this Luxottica company. You do have Warby Parker in the marketplace and maybe a handful of others, but this is a dominant company inside of that. And obviously they manufacture Ray-Ban glasses, which Meta has a partnership with as well. They have an equity stake now just under 3%, potentially growing to 5% as Meta just going all in on the wearables, AI, large language models, making a full pivot out of the metaverse into AI. And we'll see where it takes them. Moving on to Apple. Start of the week at 213. This one drifted down by about 1%, finished the week close to 211. You have some executive shakeups over at Apple with one of their key executives moving to Meta, but also their current chief operating officer, which has been with the company for a long time, is being replaced by another employee who's been with the company since 1995. It looks like, so Meta can move very quickly because Mark Zuckerberg is obviously the founder. My guess is he's the majority shareholder or individual majority shareholder. He probably has all the voting rights and all those types of things. And so they can move very fast because they are a founder-led company. Apple's going to move much like a Titanic ship that's going to have to get steered and maneuvered a little bit more carefully, but it appears, at least from an outside view, that they are rearranging the deck chair, so to speak, and potentially getting things set for a bigger 2026, including a new slate of new products, including entry-level iPhones, iPads, MacBook Pros, higher and lower end versions. Looks like they're trying to attack all the price points across all the product lines, and we'll see if Apple comes together with some wearables as well, including glasses. The speculation on Wall Street is potentially Apple makes an acquisition, and Perplexity, which we'll talk about when we get to the Google segment, launched their own browser. This is a popular AI company, which I haven't really toyed around with. I haven't had the need for it, but a lot of people speak very highly of it, and many believe potentially Apple could come in there and buy this company for multiple billions of dollars. The company certainly could afford it. Now, the F1 movie took $300 million globally just last week, and a lot of people going and checking out that movie, and that has Apple thinking maybe they want F1 rights, the actual F1, the actual sport that is raced across different geographies, attracts a very kind of high-end, affluent type of viewer, very passionate viewer as well. Apple potentially looking for the rights to air that on their platform. Moving on to Amazon. Start of the week at 223. This one during Amazon Prime Week drifted higher by about 1%, finished week close to 225. Now, early in the week before Prime Day started on Tuesday, many believed that it was going to be a smashing success. But then we got multiple press releases and speculation that maybe Amazon Prime Day could disappoint, including data that shows that sales were down 14% year over year, at least during the first 4-hour window that it was being compared to. One thing that we do know over the past year that has been kind of a loss of third-party sellers, which could contribute to some of the deals. I remember when I was selling, I don't sell on Amazon anymore, but during the pandemic, it was like printing money over there. And so I was selling a lot on Amazon, and it was actually a relatively large business for me for several years. They would prep you for Prime Day. They would let you know like 3 or 4 months in advance, like, hey, get your inventory, get your deals ready. And with the lack of the third-party sellers, it puts more pressure on Amazon. Now, on the AI front, they're looking to boost an investment in Anthropic. They already have a multi-billion-dollar stake alongside Google in the AI startup that many believe is a rival to ChatGPT, Grok, and a handful of others. Amazon would probably be wise to maybe buy almost the entire company. Now, Vertiv, which supplies cooling equipment, among other things, to data centers and is a key supplier to the data center, particularly Nvidia-controlled ones, they saw shares dip at least briefly during the after hours after AWS detailed in a blog that they have an in-house cooling solution. When you're at CES or any of these events where you can get up close and personal to these data center racks, you know, like liquid cooling on a rack, obviously you're cooling something that costs tens of thousands of dollars. But when I look at it from the untrained eye, it doesn't look like super proprietary type stuff. So it doesn't surprise me that AWS or one of these big time server and data center providers can come up with their own in-house solution. But there's plenty of others that will rely on off-the-shelf stuff from Vertiv. Now, Jeff Bezos selling a lucky $666 million worth of Amazon stock. I bet his new wife is just lighting up even more for the former founder and chief executive over at Amazon, just getting richer and richer. Last time he sold Amazon shares this quickly, the shares took a major tumble. We'll see if that happens again. Moving on to Netflix. Start of the week at $12.86 before earnings, just about 7 days from now, actually 6 days from now. Netflix drifting lower by about 3.3%, finished week at $12.41. The expectations for Wall Street are about 15.5% growth to about $11 billion. Really tight range that Netflix tends to trade in because you don't tend to have a lot of churn. You also don't have a lot of people that don't already have a Netflix subscription want to just show up and buy. The expectations for the upcoming quarter, the Q3, this will be what will drive the stock, at least in the after hours. And just technically, which we'll look at here in a moment with Netflix, it's setting up at the top of the range, so expectations are high. They better come in at about $11.25 billion in the upcoming quarter, or about 14.5% growth in order to maintain the high stock price, although pullbacks in Netflix probably should be bought relatively aggressively. Moving on to Nvidia. Start of the week at 158, drifted up by over 4%, and it crossed that $4 trillion market cap as Nvidia closed the week at about 165. As I said, it closed above $4 trillion market cap. It's now the most valuable company in the world. And if you look at the growth trajectory heading into next year, I mean, I don't think we're going to get to like $8 trillion within a year or two, but you certainly have a path to hold the $4 trillion market cap. And then with Nvidia, with all the cash flow they're going to generate, sure, they're going to buy back the stock. And at this valuation, maybe not the best use of the cash, but they probably have other things that they can do. I mean, there's a lot of things that they can do with the cash. We'll see what Nvidia decides to do. That is the big mystery. And maybe potentially the big upside for Nvidia, if they use the operating cash flow that they generate in a very smart way over the next couple of years, it will pave the way potentially for a much larger company. Jensen Huang is managing his relationship with Trump and the White House, I think, very well. Probably among all of these CEOs, he's doing the best job. He's trying to play both sides as he met with Trump inside of the White House this week. He obviously has a very close relationship, but he also has a close relationship with China. And my guess is he met with the White House as he heads to China later next week. As you know, the Chinese market essentially closed off to Nvidia primarily because of Trump and the White House, and to a lesser degree at this point, Biden administration. So if Jensen Huang can convince Trump to open up the market, well, you got $4 trillion and potentially more coming to Nvidia. Now, he's not sitting around and not selling his stock. He sold $36 million worth of Nvidia shares this week. He's catching up to Warren Buffett's fortune. And I certainly don't blame Jensen Huang by taking some chips off the table at this record valuation. Also, $36 million is a fortune. I'd be having a party if I had $36 million showing up in my bank account. But just keep in mind, he has to pay California state income taxes. He's paying federal income taxes and a lifestyle out here in California. While I could comfortably survive on $36 million, it actually is like, I hesitate to say that. If you look at real estate prices, it's actually not as much as you think it might be out here in California. Moving on to Google. Start of the week at 178, drifted sideways. We're a couple of weeks away from earnings on Google as it closed the week at about 180. Perplexity launching its own AI-powered browser called Comet. We'll see if these AI-powered companies with Perplexity, and we'll talk about OpenAI here in a second, can they move into the browser? Do people want to change their browser? Because the browser has your password, it has payments, it has all your saved tabs. It's like your phone a little bit. Are people going to change their browser faster than they seem to do with phones? If you're in the Apple ecosystem, you seem to stay there. If you're in the Google ecosystem, you tend to stay there. If you're a Mac user, you tend to buy a new MacBook, and on and on and on. We'll see if browsers they certainly are less sticky, but we are going to find out over the next year or two. Is it not sticky at all? Opening up opportunities for both Perplexity and OpenAI, which plan to open up or launch browsers here very soon. Now, deep discounts are coming to the United States government in the form of contracts. There was a report that Oracle slashing prices, Google slashing prices, Microsoft, Amazon, and others cutting the price that the government has to pay. Those companies certainly can afford it. I read some research that this could negatively impact some companies, maybe like a Palantir that relies almost not exclusively, but a large amount of their contracts come to the federal government. So if you have these large software providers cutting their prices, what does that allow the pricing power of maybe Palantir is not a great example because they're more in defense and there's maybe higher value there. There's less competition and those types of things. But if the pricing power at the federal level diminishes and the expectations are you're supposed to basically almost give the software away or wholesale it to the federal government, well, it could impact some of these companies. We'll see what happens there. Now, teenagers can now drive in Waymo robo-taxis in the great city of Phoenix. This is awesome. I think if you're a family and you're working and maybe you have one car and your kids are in high school or something, and I live right by a high school and I see kids getting bussed in and stuff like that. And so kids are taking public transit to a school. And so this could just give a kid another way to get, this is how I'm thinking about it. You know, this could just give another kid a way to get to school. Although I do have other family members that have taken Ubers to go, hang out with girls late at night. And that's always a fun conversation to have with them during the holidays. Moving on to Microsoft start of the week at $497. Boom. You're going to see this one technically up 1%. Finished week at 503. The one big, beautiful bill. It looks like it's signed into law, and it could boost the free cash flow of Microsoft, Oracle, and many software providers. In fact, it's funny that Washington is talking about this after the signature. But if you want to be a great investor, you should sign up for my free newsletter, because back on June, over a month ago, I said that a new tax bill could send software stocks soaring. And it's literally the argument that Washington is making, because if you dug into the bill about a month ago, all of this was clear as day in the draft portion of the bill. And there's a reason why Microsoft, Oracle, and many of these companies have seen their share price continue to rise. And I outlined it for subscribers a month ago, and that's a free newsletter. Now, one place that AI really hasn't gone is inside the classroom. And once a week during the school year, it's the summertime right now, but once a week, at least once a week during the school year, I'm actually in an actual classroom. I'm not a teacher. This is all done at a very free 99 priced salary, but I go in there and I teach finance. And one of the reasons I do it is it's fun. It's fun to try to inspire and educate the next generation. Number two, it gives me a great incentive to work on my communication skills and presentation. Over the past 10 years, as I've done this, I think I've become a top 1% speaker. It has to do with YouTube as well. One place AI isn't yet is inside the classroom. In fact, there's specific bylines inside of the school's rules that says you can't use AI. And anytime I'm in there, and what's interesting is the school lets me have free reign and lets me treat the kids like adults, more or less. And I tell them, in a couple of years, AI is going to be on the table of everybody in this school. And Microsoft, OpenAI, Anthropic are launching Instruction Academy with teacher unions. This is the next step with AI. I remember and many of you will probably remember this as well. When the internet was being launched, your teacher still wanted you to go to the library, still wanted you to pull up microfiche and all that type of thing. Eventually, they forgot about it, and the internet became a thing, and eventually AI is going to become a big thing inside of classrooms. That's the next leg, probably for data centers as well. OpenAI completed a $6.5 billion deal to acquire that Johnny Ive AI startup, and they potentially will launch a new device maybe as soon as next year. Now, the reason why AI is not in a bubble, the reason why when these companies report earnings in about 3 weeks, they are going to get on their conference calls, Microsoft, Amazon, Google in particular, they're going to get on their conference call and they're going to say that demand is far outstripping supply as it relates to AI access on their data centers. They're going to get on there and say, we've got to spend more and more money. And the reason why they've got to spend more and more money is because these companies are leading the way, showing how much money AI saves companies. Microsoft saying it's saving them $500 million just last year. Mark Benioff, the CEO of Salesforce, says AI is doing 30 to 50% of work at Salesforce. These are tech companies. Wait until financial institutions have implemented this a little bit, but that'll be a next year, a 2027, 2028 story. Every company is going to implement the same type of cost strategies that these companies are going to use. And so you are going to have exponential more growth as it relates to data centers and the need for them. AI is fun to make memes and to chat with and those types of things, but what it ultimately is a business productivity tool, and it saves businesses money. So the investment that these businesses will make, because AI makes them money and saves them money, that is why the investment has been so strong and so long lasting. Moving on to Tesla, start of the week at $291. And what happened? Tesla blasted off by almost 8%. Finished the week at $313. This as earlier in the week, the stock skid. Everybody was crying on XAI or X platform or Twitter, whatever you want to call it, as Elon Musk launched what he calls the American Party. I think he explained it relatively well. If you're outside of the United States, I'll just give you a quick overview. We have a House of Representatives and we have a Senate, and you have two major parties here in the United States. You have Democrats and Republicans. And right now, most people would agree that at least among the people that vote and vote regularly, it's pretty evenly split between Democrats and Republicans. So if you look at the majorities inside of the House of Representatives and the Senate, it is very close to 50-50. Sometimes it's 55% one way. Sometimes it's closer to 50-50, 51-50. So one vote, one way or another, can really sway things and can really either hold up legislation or move it forward. With the America Party, Elon Musk's plan is to fund and strategically fund a few candidates in few regions that might be open to electing an independent or a third party candidate. He's not looking to do American Party president or have an American Party take over politics. All he needs is probably 4 or 5 people to win, and then you have complete control over what legislation is passed. That's what he's looking for. It's actually an intelligent strategy. I don't know if he's able to pull it off. I also don't know the impact it will have on Tesla. I can tell you, though, a third party, we'll put this in air quote, a neutral third party away from Democrat, away from Republican, probably better than the pro-MAGA ultra-Republican Elon Musk in the long run for Tesla. Now, they are eyeing the Tesla robotaxi expansion inside of the San Francisco Bay Area. There's a current beta test happening in Austin, Texas, where you have a human driver in the passenger seat. And so far, during the first week, there was obviously a lot of news coverage and a lot of attention. And it was like, oh, the Tesla swerved a little bit, or it bumped, or it did this, the tire scraped somebody. Thank God there has not been any tragic accident. And we hope to God that, like with Waymos and Teslas, obviously that stuff is going to happen. It's the statistics just say that it's likely to happen, but we obviously hope that it doesn't. And what I would say with the robo-taxis inside of Austin, Texas, no news is good news. I have not seen anybody really talk about this unless you really kind of dig into it. So this is probably a good sign for Tesla that things are going at least relatively well. Now, can you open up the San Francisco Bay Area marketplace? Probably so. They are also planning to test robo-taxis in Phoenix, Arizona, which obviously also appears to be very pro-robo-taxi as it relates to Waymo. And if the robo-taxis can continue to roll out, probably good for Tesla. The CEO of X stepped down this week as there was a lot of stuff going on X. I can't admit that I was following all of it, but probably doesn't have a huge impact on Tesla. Now, ArcBest, which is a less than truckload carrier, so it's one of these kind of truck companies that carry truckloads. They go and pick up maybe a small load and they try to fill up the bed and doing all these types of things. Essentially a truck brokerage firm, but I think they own and operate the trucks. They tested these Tesla semi-trucks. Now, where I live in California, I see these things all the time. I make a longer drive on Wednesday with my son, and we're seeing 2 or 3 of these because Frito-Lay has kind of a main artery that they're using these things. So it could open up a revenue source for Tesla if these things become popular. My guess is these are like $250,000 type trucks. So you don't actually have to sell a ton of them to move the needle over at Tesla. Now, XAI unveiled its new AI. It's called Grok 4. It advertises itself as the most AI advanced model yet. I saw the presentation. I haven't had a chance to really play around with it. I thought Grok is good. Grok is good for certain things. Anthropic is good for certain stuff. ChatGPT. I tend to rely on all three. Right now, I'm only paying for Anthropic. And I use Grok as it relates to, I think I pay Twitter $10 a month or something, and so I get some access to it. Grok is the best for real time. If something has just happened in the past 24 hours, it's likely to have the most up-to-date information. It's very good, I believe, also for fact-checking and research, but some of the other ones, I believe, at natural language are better, Anthropic being the best. Now, Grok is potentially coming to Tesla vehicles very soon, and maybe not potentially because Elon Musk says it's coming, so that will be interesting. Moving over to the technical segment of the show, you'll see the price is bouncing around a little bit. I'm not feeling like 100%, so I started this show a little earlier than normal, but it doesn't look like we've had a massive sell-off. S&P 500 basically setting up exactly where we were a week ago. I'm on a weekly chart. Some people ask me, like, is there a difference between daily and weekly charts? Not really. You can just kind of put the chart up how you want. I think if you're trading on a shorter time frame, you're going to want more candlesticks, more data. But I tend to look at these things when you're looking at it more broadly and you're trying to draw on these broader trend line, longer term trend lines. It's just easier to fit like a weekly or even a monthly chart. Right now, the S&P 500 just holding the all-time highs. But again, we're moving into earnings season. There hasn't been a lot of press releases or a lot of news outside of kind of Meta's massive hiring spree. So these companies are going to break a lot of earnings news and then news over the next few weeks. Meta pulling back from, I think that's essentially an all-time high. Very normal place to take a breather with Meta. I'm going to slide myself over to the other end of the screen so I can see when the next earnings report with Meta. We are 19 days away from earnings, and these earning dates tend to be an estimate on TradingView, but it's more or less a pretty close estimate. Deeper pullbacks in Meta after earnings. And last time we had earnings, all these companies were setting up at the bottom and then they rallied up. So the opposite could potentially happen here. Deep pullbacks in Meta, particularly back to like 550 would be like a whoop, push the chip in moment. Now, Apple's bounced off a very logical level down here at 198. It's essentially sitting right underneath the middle of a channel. Apple reporting their earnings about 20 days from now. Amazon trying to approach the all-time highs back up here at 240. Those were made earlier this year. You've got Amazon earnings in about 20 days. This one holding a longer-term trend, which is represented by this yellow line. Pullbacks in Amazon, while if it happens really soon, would not have confirmed a new higher high. Wouldn't be super alarming because you're pulling into a huge area of support back here in the 180s. Netflix is the first to report their earnings. They'll do it in 6 days, so next Thursday. This one looking absolutely fantastically set up for a pullback. In fact, it's already gotten rejected from its highs up here. We'll call it about 1320. We're sitting here at about 1245. Tough to say what Netflix, I mean, yeah, there are ways that can surprise to the upside on revenue, but a lot of that is priced in. Pullbacks in Netflix can be bought. I think the first one is on a conservative basis back here at we'll call it maybe 1160. Further pullbacks back to like 1050 would be even more attractive. Nvidia has just broken to a new all-time highs. Most of you guys know the drill. When you break to all-time highs, there's kind of an anti-gravity effect. These things can kind of drift higher. Now, Nvidia complicates the situation because they don't report their earnings for another month and a half or so, or about 47 days, although you'll hear from other companies like AMD, ASML is next week, I believe. TSM pretty much is telegraphed that things are good. I mean, there's no reason why Nvidia's stock should be going down. It's obviously one of the most followed companies in the world from a supply chain perspective. So things are looking good. You could get a push higher. When we look at the Microsoft chart, you're looking for rejects up at these areas and pullbacks in Nvidia. Moving on to Google, it's basically just sitting in the middle of the range. Got a lot of questions really from premium subscribers this week. Hey, what do I think about Google? It's in the middle of the range. You know, if you want to buy Google here, it's not the best spot, but it's certainly not a bad spot. This is just, I would say this is an average place, at least from a technical perspective, to buy Google. Now, from my perspective, when I am pushing the send on a recommendation, I like more things to line up. I like the odds stack much more, not just in my favor, but my subscribers' favor. And so I try to curate just the best of the best buying opportunities. For Google, it would be a little bit lower. You got earnings about 18 days from now. Pullbacks on that report should be bought relatively aggressively. A shoot higher could be a profit-taking moment. Now, speaking of profit-taking, you could potentially take it in Microsoft leading into earnings 19 days from now. We talked about with Nvidia, when you break to new highs, just like Microsoft did, there is an anti-gravity effect. The previous highs with Microsoft were right here at 466, and you see we just drifted all the way up to 5. Now, what is Microsoft going to have to do on their conference call 19 days from now to continue this move? It's going to be incredibly difficult for Microsoft to continue this momentum. So you get rejects in this one back to 467. Again, average buying opportunity. Shorter term, that can be more of a trading opportunity. Further pullbacks, particularly into this consolidation area in the 440s and lower, is a good spot for Microsoft. Moving on to Tesla, still looking great. Reset this. You can see broader trend with Tesla is this purple line. In fact, I'll clean this up so there's not all these lines on here. We'll leave those ones on there. The broader trend is this purple line. So we're actually still well above that. I've identified what I would call maybe a secondary trend that we've been on really for like 2 or 3 years now. You're sitting at the middle of the channel there. So just similar to Google and some of these other stocks, it's an average spot. If you like Tesla, pullbacks back into, we'll say the 250 range can be bought. Tesla does report their earnings after Netflix 12 days from now. And investors are going to want to know about Robotaxi Optimus, Grok being in the cars. Obviously, the car sales are known. They essentially report that every month. And there's a lot of stuff that Elon Musk can say on a conference call to quell some concerns, and a push higher with Tesla back into the 516s probably would trigger some type of profit-taking event. But it wouldn't be all surprising from a technical perspective. Folks, that was the FAANG Stock Recap Show for Friday, July 11th. Stay cool this weekend. Stay safe. And we'll see you 7 days from now. And also, over on the premium side, we've got a ton of earnings next week. Bank earnings, JP Morgan, Wells Fargo, Goldman Sachs, ASML reports next week. Obviously, Netflix. All that stuff will get funneled to the premium side. Thank you, everybody, for being a subscriber. I've turned off subscriptions for the time being because we're going to change our offer. And believe it or not, we're actually raising the price because things are going pretty well. And we actually want less subscribers than just everybody in there. Just like Rolex doesn't need everybody buying their watch and Mercedes doesn't need buying their car. Equity Empire is not for everybody. And those of you that have taken the leap over there, we really, really appreciate it. And we're doing everything we can to try to actually just deliver for the people that want it. And we actually don't want it to grow much more maybe than it already has. Hopefully you guys enjoyed today's video. We'll see you again next week. Good luck with your investments.